Welcome to the Altius Research Market Recap. Okay, we're going to talk about the petrodollar, the Iran war, and US Treasuries today, and we'll go over some of the stock market as well. So let's start with some of the latest news from today. Some of the most important headlines that I saw today were the Royal Navy to spearhead a coalition mission to reopen the Strait of Hormuz. So I kind of had doubt that that would materialize, but I guess it's not surprising that the UK would join us on that since they are our closest ally. But we haven't seen reports of anybody else committing to that yet. Um, Another headline was the US and a group of regional mediators are discussing the possibility of holding high level peace talks with Iran as soon as Thursday. And that was coming from Axios. And today, Trump took questions from the press at the DHS confirmation hearing, and he tried to talk things down, calm things down again today, mainly just because the markets are under so much pressure. So he said we're talking with the right people and that they sent us a gift through the strait. So presumably they allowed some oil to go through. And then he also said that we chose not to blow up that primary power plant that we said we would take out if they didn't agree to talks. So he said he was hopeful for a deal, but honestly, it just didn't sound very convincing to me. He did say, like, he had a quote where he said, "This is regime change," but it just didn't really feel like that's exactly what he meant. So the market went up a little bit on that, but then sold off shortly after. But my read on this is that it was sort of a stall tactic, just to calm the markets down, to take some pressure off financially until the U.S. ground troops and Marines arrive in theater. And they're set to arrive on Friday, either Thursday night or Friday, I think is the latest information that I was able to find on that. So it feels to me like this is still going to escalate from here. And Trump was just trying to calm things down because he was under so much pressure from the markets. So yeah, earlier today I tweeted out I thought that the stock market bounce would be likely short-lived and that the bond market continues to price in prolonged military action. So if you look at the chart here, we'll look at QQQ. This is the NASDAQ. So this was today. It's like if you just look at the last couple days here, bear with me here. Okay. Yeah, if you look at the last couple days here, we've been looking for these sort of capitulation candles, like I've been talking about down here, where you get a lot of like a high volume of selling. And the last couple days, we have started to see an increase in the selling, which isn't surprising as we keep trending down. But we've just not really been able to hold anything. Let's go to a 1 hour chart here. So yeah, I mean, you can see starting on last Tuesday, we've just kept going down and not able to hold and just slicing through all of these moving averages. Back to 4 hours here. So you can see we're sort of matched with this November bottom. That's kind of where we're at right now. We're holding that level for now. But if we lose this level, which looks like could happen tomorrow, uh, or anytime this week. I mean, we'll see. But if we lose that level, I mean, the next support level is sort of down here in like the 560 area. And if we get down there, I mean, that's where you'll really start to see some bigger capitulation candles and some big selling coming in to get us down to that level. And it's starting to look like that's sort of the base case of this, unless they can reach a deal quickly. Um, but I mean, that could even happen tomorrow. I mean, it's possible that we could lose this level overnight and just sell off into tomorrow, and then that could be the capitulatory event that some of us are looking for. But and and if we do get down to that level, you have to wonder if it will be resolved quickly or if this is just going to continue to go on for months. because again, it's just now looking like there's a clear off ramp to this conflict. So yeah, that's the Nasdaq. We could look at the S&P 500, and it's a similar story there. What concerns me is that the selling has been pretty orderly so far. And what I mean by that is that we're just like we're breaking lower and then we're chasing back up, breaking lower, chasing back up, breaking lower, chasing back up. And like again, like we just haven't really seen like total capitulation yet. Um, like we did last April. I mean, you could see just massive amounts of selling down there. But yeah, it's orderly so far, and we just haven't really broke down decisively yet, which makes me think that there's still lower lows coming. Um, yeah, the other let's look at bonds. So we'll look at the U.S. 10-year yield. So yeah, so these are still elevated. I don't know if something just happened. It looks like they came down. Uh, yeah, I don't know. I'm not sure. I'll have to check. It looks like something just happened because yields came down. So I'll have to see if futures are up. Let's see if futures are up live here. This is S&P futures. Yeah, they did fly up after the close here. Let me take a quick look so I'm not giving you outdated information here. Give me a second here. Okay, so Macron said that he spoke with the Iranian president. Um, okay, from Israel, a month-long ceasefire will be announced according to a mechanism being worked by Witkoff and Kushner. Okay. So it looks like they're trying to angle for a 1 month ceasefire. Oh man. I mean, honestly, that's the worst news. If you wanted a quick end to this conflict, that is the worst possible news that you could get right now. And I would expect that this bounce in futures will be short-lived as that is further priced in. Because I mean, the point of these ceasefires is just to build up more ground troops in the region. So I mean, that's what I would expect to see following this announcement. So I would regard that headline as extremely negative, and that's the last thing that I wanted to see as a long investor from this point. But so let's get back into the yield discussion. Okay, yeah. So this is the U.S. 10-year yield. Let's go to a daily chart. Yeah, so I mean, even though we just came down a little bit, we're still up a ton. As you can see, like before the war started, we were all the way down at like 3.9% yield on the 10-year, and then we got as high as almost 4.4.5%. But we're still at like 4.3% right now, which is not what you want to see, because when these yields rise, basically that just means that the financing costs for the U.S. government are rising, and then that will put pressure basically on the entire economy, because it's not just treasuries that rising rates affect. It also affects corporate bonds, and then it gets more expensive for corporations to finance their operations. So yeah, you really don't want to see yields rising, and we've seen a phenomenal rise in interest rates just in the last month purely because of the war. Yeah, so when Treasury bond yields rise, that basically means U.S. government borrowing costs rise, and then that puts pressure on equities, on growth, and basically the entire market. So today there was a 2-year bond auction. So let's look at that. This is the 2-year yield. So yeah, and it's basically the same story. The 2-year yields are spiking up today, and I did see on CNBC they have this bond bond analyst called Rick Santelli, and he's quite good if you listen to him. And every bond auction, he gives it like a rating, like a letter grade, and he gave this one a D. And his quote from that was, "It was the biggest tale in 3 years as foreigners spend cash not on U.S. debt but oil." So he was arguing that because oil is so expensive that foreign investors are buying less U.S. Treasuries, which causes the yield to rise. So basically, the U.S. has to raise the yield offered on the bonds to get people to buy the bonds, and that's sort of the supply and demand of the bond market and how that works. So yeah, so let's see this too. So this is gold. This is an interesting, and all the precious metals charts are pretty similar to this. Silver's also similar. So gold peaked at like GLD at least peaked at 510 in February, and then we're all the way down to 400 now. And yeah, since the war started, it's been a huge collapse in gold, which has had a phenomenal run. So I mean, it's not too surprising that this has happened, but I did see that this is one of the biggest sell-offs in gold history. I think it was down like 10 sessions in a row, and it might have just eked out a positive finish for the day, but yeah, it was like 9 or 10 days in a row where gold was down. But yeah, that sort of furthers Santelli's point, showing that so foreign investors aren't even buying precious metals again presumably because they're spending all their money on oil. And this kind of gets into the main point of what I wanted to talk about today, which I was doing some research, and it's just the more I think about it, the whole war in Iran sort of seems like this U.S. petrodollar trap is how I would describe it. So earlier in the week, and possibly now, it's not clear. I tried to look up further information about this, and it's just not clear because we don't really know which ships they're allowing through and what deals they're making. But it seems like they're making like deals on an individual basis for each ship to go through. So yeah, earlier in the week, Iran said that they're going to allow ships to pass through the strait if they pay in Chinese yuan. And that, once you start to think about that, that's a direct threat to the U.S. petrodollar system. So a brief history of the petrodollar is that the Gulf nations agreed to use the petrodollar system in exchange for American defense. So our bases in the region are sort of like the physical power presence to back that up. And then what's happened over the last couple of weeks since the war started is that our bases have been bombed. The Gulf nations' critical infrastructure has been destroyed, a lot of it, like the desalination plants, the power plants, and the oil and natural gas facilities. So we're not really holding up our end of the deal there in terms of protecting these Gulf states. So the way the petrodollar system works is that Gulf states price oil in dollars. So they trade oil in US dollars, and then the surplus from this is recycled through US Treasuries and US banks, and in exchange, they get US military protection. And this is sort of how the US dollar became the world's reserve currency, like when you hear that being talked about. So it seems pretty clear that the play here is to try to get the Gulf countries to doubt American defense and the petrodollar system. And this really would be like a change in the world order if they were able to pull this off, where like if they really did go forward, refusing to use the U.S. petrodollar and instead using the yuan petrodollar, that would be one of the most significant geopolitical events in U.S. history. So the question really though is this just a strategy that Iran came up with, or are they being directed to do this by China? And in either case, do they plan to see this all the way through, or are they just looking to make a deal in the short to midterm? And I did see at the beginning of the war that the U.S. was having talks with China. So you have to think that there's some sort of coordination there, but it's unclear publicly to what level that's taking place. And that also sort of explains why our European allies aren't helping as much, because many of these European countries have deals with China already. Like they don't import U.S. cars, but they import Chinese cars and various other deals that they have going with China. So they're like sort of effectively hedged in this U.S. petrodollar versus Chinese yuan battle. Um, but yeah, that when I thought about that today, I just found that highly concerning. Um, and now when you pair that with the idea that there's going to be a month-long ceasefire, I mean, that suggests that this is going to be a prolonged military engagement and that this is going to go on for months. I mean, just by definition at that point, if the ceasefire is a month long. Um, so, I mean, you have to think about it like, was this a trap from the beginning? So when you consider that, um, some of our partners in the region have been giving us bad intelligence for years, have a history of doing that, have sabotaged the peace talks at every opportunity they have had. Um, and many of those countries also have deals with China. So another thing to consider is that the deputy secretary of defense is Stephen Feinberg. He's the co-founder of Cerebras, private equity firm with 70 billion in assets. And that firm is invested in Stratolaunch, a missile testing company, Vivace, a missile manufacturing company, Northwind, they do hypersonics research and development, and Navistar Defense. They do military vehicles specifically that would be deployed in the Middle East. Um, and it gets uncomfortable to talk about this at a certain point, but I think the key question to ask is are the people and the interests surrounding President Trump aligned with American success? And I think that that's a key question that you have to ask at this point. Um, but yeah, I find this all extremely concerning, and the fact that we just learned that there's going to be a month-long ceasefire, that's very bad news. Let's see how the futures are looking right now. Yeah, they're still up on the announcement, but it is being faded a little bit. But yeah, I find that very concerning. Uh, and it looks like this is just going to keep going on. And if that does continue to go on, it's difficult to imagine how that doesn't continue to weigh on the bond market and on the equity markets. And I mean, that's sort of what we're focused on here. So I'll try to keep it in that conversation. Um, but yeah, I mean, so if you're talking about a month long ceasefire, then we're just going to get more volatility and geopolitical uncertainty for a month, and then that's going to have to be priced into the bond market as well. So I mean, then we'll be looking. So if this is going to go on for at least a month, um, that's going to continue to be an issue for oil, which has also come down after that announcement today. But I would expect oil to remain elevated now for at least a month, until that, and then after that, obviously. Um, yeah, and then so because we talked about this last week, but elevated oil prices will also be like because energy is a core component of the CPI, the inflation index. That's going to continue to drive inflation higher, and with higher inflation, the Fed will be less likely to cut rates, which is what President Trump continues to want and pressure Powell to do. But if we've got elevated inflation due to higher oil prices, the Fed is not going to be able to cut rates. And that was another thing we talked about last week, where by the end of the year, they're actually pricing in 1 to 2 rate hikes as opposed to rate cuts. And all of that just changed in the last 4 weeks. And it's this sort of volatility that upsets equity markets. So the longer this goes on, the worse it looks, not only economically, but geopolitically. And at some point, you would hope that President Trump can understand what's going on here, or, I mean, perhaps he's even complicit with it. I mean, I don't want to get into too much political speculation, but um, it's it's a concerning situation. I think we'll end it there for the stream. Thanks for listening, guys.